Why don't we jump right into it? Shane, I'll start with you. So vendor management. What is vendor management? How do you describe it when you're talking to clients, prospective clients? How do you describe vendor management?
Yeah, it's a very broad, open-ended topic.
Yeah.
Um, so what do we actually talk about when we talk about vendor management? Sometimes people use terms like procurement, spend management, third-party spend management, benchmarking. I could go on, but I suspect all of those apply and more. Um, we like the term vendor management because it's broad and really can boil it down to a handful of questions. Um, to give you a frame, it would be who are we working with? As a starting point. Who are our vendors? It's amazing the number of our clients who aren't actually able to answer that information when we started. And some of the operating roles I've been in, I wouldn't say I always been able to answer that question too. But who are our vendors? What are we spending with them? What are the terms? Um, what is our relationship? We'll talk about that a lot, but what is our relationship with these vendors? Do we know them, right? Not just this entity of Concertiv, but who do we actually work with at Concertiv if we were one of your vendors? So, is it Shane? Is it Elliot, right? Um, Specifically, what value are they providing for us? Um, and is that what we expect? So that's what vendor management is. Who are they? What are we spending with them? How are we working with them? Do we have a real relationship with them? And are we creating the value that we expected to have?
Okay, great. Elliot, from the other side of things, right? You're the client here. You're the one that would be working with a firm like Concertiv to address your concerns with vendor management. How do you think about vendor management?
Yeah, I mean, at first, the first thing I think about is whether or not this is a strategic relationship. Um, and when you have strategic relationships, you really want them to be partnerships and go in there with a partnership mentality as opposed to buyer seller, right? Those tend to be more transactional. I need a service, somebody can provide it, I'm going to pay for it, and they give me what I paid for, and it doesn't go much deeper than that. But in our space, when I think about key service providers, one that comes top of mind would be for those of us that outsource record keeping is your fund administrator, right? And I think it's really important to be very connected to a vendor like that and think of it more as a strategic partnership. And in order for that to happen, there's got to be a lot of upfront communication, and you have to manage them as if they're an extension of your team, and they have to feel like they're on sub level part of your team and connected to your firm. And I think when you have that, you set yourself up for the healthiest relationships. And when I think about strategic partnerships, they're not always the easiest to establish and to cultivate, but I think they're important to think of them that way when they are strategic in nature. And so a fund administrator is doing a lot more usually than just books and record keeping, right? They could be involved in your AML KYC process, onboarding investors, fundraising support, tax support, your portal, and a whole host of other services as that industry has matured over the last decade. For a lot of us, also, you think about your banking relationships, right? A lot of us are working with regional banks. Regional banks tend to try and usually successfully work with you on a concierge basis, right? And really trying to cater to your needs. And you have to be connected to them. You got to be communicating with them potentially daily. Um, and then there are other vendor relationships that can be strategic in nature if you take the time and effort to approach it that way. And one example there would be Concertiv, who we've been partnered with for probably a decade. And the interesting part about that relationship is on some level, they've served as a conduit and a platform to other vendor relationships that maybe historically were transactional in nature. They provide a service, I just buy it. But now working with somebody like a Concertiv, I can think a little bit more strategically about things that we work with them on over the years, such as market data consumption and travel, right? Where those things historically maybe were not, were maybe, just not thought of as strategic partnerships. Now I can talk to somebody who's an expert in that area that's canvassing the market, and I can talk to them about, you know, historically, what have I gotten out of those people? What is it that I need going forward? And how do we create the best match so that it's a healthy two-way relationship as opposed to just a sell on one side and a buy on the other? And that can lead to a much more healthy relationship with better longevity in some cases than you might have if you're working directly with certain vendors. So that's how I start thinking about it.
Yeah, I like the way you talk about it there, Elliot, where you're talking about a partnership, and we'll get into this a little bit later on in the conversation. But it sounds to me like what you're looking to do is kind of decommoditize things here, where, as you said, instead of just transactional, buy, consume, and move on, you're thinking of things strategically, and that kind of puts more value in that vendor relationship there. So definitely some great points there. And like I said, we'll get back to that shortly. But before moving in that direction, you know, where where have you struggled in the past with vendor management, whether it be at your current firm, prior firm? Where has that process broken down? What's made it a difficult process to manage?
So I think so there's a couple of situations. One is a lot of times in our firms and vendor relationships can be decentralized and fragmented. So for example, a lot of times your investment professionals will have direct relationships with vendors that are providing something that is important to that person, or maybe two or three people that work together on a particular project. And what you realize very quickly is that that may work in a narrow silo for a period of time, but at the end of the day, that vendor's capabilities and resources may not end up becoming available to a wider set at the firm. So you're not getting everything that they have to offer. After a while, that can breed frustration. And when you start having frustration, you start devolving into an unhealthy relationship. And so I think having some semblance of centralization, not necessarily captivity, but some level of centralization, and creates an open dialogue. You can open up that vendor services to a larger percentage of the firm. And you can also negotiate better from a position of strength because you have better communication. In some cases, you have direct communication with the service provider and not just a salesperson, right, who's focused on just renewing you and capturing their commission or their piece of the action. But you're really kind of strategically looking at what services are offered, who else can use them in the firm, and let's have a consistent, continuous dialogue about how to make that relationship long lasting. So that would be one area where, we've experienced issues in the past. And through trying to centralize it, a single point of contact, we've found a lot, not perfect success, but a lot of success, more success than failure in that approach. So that'd be one example.
Okay, no, that makes sense. Shane, how about it from your perspective? Right, Elliot has seen it from a single, excuse me, a single firm perspective, but yourself, you've got a significant number of more touch points here. What have you seen? Where have you seen struggles? What are some of the pain points that some firms have when it does come to vendor management?
Yeah, I mean, I would just add that in the beginning of my career, as a global macro investor, was at a $30 billion fund. I was in my early 20s. I was supposed to be doing research and trading mostly, but when you're the 23-year-old on the desk, you generally get handed this stuff at the end of the day. And that was actually how Concerted first got on my radar as something that was solving a real problem. Because 20 years ago, I was going through that problem, and candidly, as a junior partial FTE, was probably wasn't doing a great job. We wasted a lot of money. So that's sort of another individual data point. Now, for context, Concertiv has over 100 clients, so we have a lot of data points. I spend a lot of my time with them, and I'll give you a fairly long list. There are probably 7 or 8 things that come up. We touched on a few of them already. The headline I would put on top of it, it's not from me. I think it's actually from Leo Tolstoy. It's the first line of Anna Karenina. I would say every happy family is alike, and every unhappy family is unhappy in its own way. And that is true for companies and vendor management, to be sure. So out of those 100+ clients, we're going to have dozens of different variants on this story, especially as they get started. So number one, which I mentioned, is you have a partial FTE or several partial FTEs dedicated to this. So it's not somebody's full-time job. It's a magic time problem. So fairly high dollars being allocated, especially when we think about things like data technology. This is what Concerted focuses travel. Fairly high dollars, fairly low attention. It's a bad mix. Number two, Elliot mentioned it, but you have local optimization. So you'll have individual teams who are trying to do what's right for their team and perhaps making pretty logical decisions, but they don't have a firm-wide view. So you have duplicate functionality with different vendors, maybe you're overspending. I mean, you can see people have this multiple contracts with the same vendors at the same institution. There's all sorts of crazy stuff there. Number three, and sort of closely related to that, perhaps one of the biggest ones, without a central view, you just can't make good decisions, right? It's just impossible if you can't see what's going on. And this is the base case for small and mid-sized firms and institutions. The base case is you don't have a view of everything. So you can't tell it's overlapping, can't tell it's being used. Oftentimes you do things like miss auto renewals, have seats that are underused or unused, have functionality that's unused that you're paying for. Like a 12% price increase that you didn't need to take, all sorts of crazy stuff like that. So I'd say if there's any one thing, it would be getting your arms around that data centrally. You don't necessarily need to control everything centrally, but you should at least be able to see what's going on. And then related to that, what do you actually want to achieve with these folks? What are the goals, what are the targets? Without that, you can't actually measure them against anything consistently. Pretty hard for individual institutions to do. I know it happens informally, oftentimes in CFO, COO forums, but having a sense of what the market looks like, it's a completely opaque marketplace for most of these vendors. So what is the distribution out there from a pricing perspective? And having some very basic benchmarking capabilities go a long way as well. That's a struggle for almost everybody when they're doing it on their own, unless you're a huge institution, which is not what we're talking about here. Elliot mentioned it, I will underscore it. You have to have a real relationship. Don't need to do it with every single, pub and sub that you have, every single data feed that you have. It's not realistic. But for the ones that matter, for the ones that move the needle, you need to have a human being there who you know and you trust. And ideally, you can call that person or you better text that person. So an actual human being that you have a relationship with, not just a transactional conversation you have every year or two when renewals come up. If you're a smaller institution, there's a lack of leverage. People feel like they can push you around. And then lastly, but not least, we'll talk about it a little bit more later, probably. We're not talking about a few dozen different options here. We're talking about thousands of different products, probably 1,000+ vendors, but thousands of different products across those vendors. It's fast changing, tons of M&A, tons of changes. AI is flipping everything upside down as we talk right now. Given the prior 7 points that I made, how the heck are you going to keep track of those changes? It's impossible. And the end result is it's a mess. How could it not be?
Yeah. Yeah. Couple things that you touched on. You mentioned the benchmarking, right? And there's a lack of standardization, benchmarking in the industry. There's not good available data that an end user can go look at and see if what they're paying is kind of in a reasonable range. It's basically just talking to one another. So definitely that has some impact on the struggles related to vendor management. The other thing you mentioned was reinforcing what Elliot was saying as it relates to relationships. And a good point that you make there is you don't necessarily have the time to have a strong relationship with every one of your vendors. Can you talk a little bit more about how you would think about which vendors are the ones that you should be developing a stronger relationship with?
Elliot, I suspect you'll have a lot to say on this one too, but
Yeah, I mean, I don't know if you want to start, but
I'll give you. I'll go quick, and then you'll probably have something smarter to say than me. But as a starting point, it comes back to what are your goals with the vendor, right? So you don't have to have a whole strategy pack for every single vendor that you work with. I think that'd be a little silly. I don't think many places do that. But you sure as heck should know, how is this vendor going to move the needle for my institution? And to use an accounting term, there's a materiality threshold. And there are probably more than one sort of echelon. We rate them into 4 tiers at Concertiv, for what it's worth. I can go through those tiers if you want, but your tier one, your tier two vendors, you should know those people. And as a proxy, you can look at spend, but I think business impact is a better lens. But yeah, if you're spending $1 million a year on a vendor, you should know somebody there. And if you were paying an employee $1 million a year, you should be talking to that person for sure. And I would just start on what are the short list of 3, 4, 5, maybe 10 if you're a larger institution that really move the needle for your business, and make sure you know those folks quite well.
It sounds good.
yeah, I
Elliot,
mean, I would take a big step back from my seat and, trying to cater to the audience that I think is, on this webinar, is a lot of times your starting point is the vendors that you inherited when you came into the seat. And so I think it's important to open up a new channel of communication with those people, bring them in, have them repitch you in terms of what are they doing for you, how are they doing it, what's worked for them, what hasn't. Because you want not only healthy vendor relationships, you want healthy vendors, right? So you need to understand what's working, what's not, and as importantly, if not more importantly, you've got to set your own expectations as to what you want out of them because you inherited them. And so unless you tell them what it is you want out of the relationship, they're going to be either status quo or in a guessing game. And that is not a good place to be. So I would start there. Secondly, I would think I would actually guess every single one of us in a CFO or a COO seat has a short list of people that they trust and respect in the industry, and they have access to affinity groups like this one and others. And you're going to call that one or two or three people and say, hey, who do you use for this? Who do you use for that? And a lot of times that endorsement is going to go a long way in you picking up the phone and calling those people and potentially just establishing a relationship and believing that that is as good a substitute as any for a real RFP or diligence. And to be honest, I've done that at times, and it is a very good substitute for diligence because, for the most part, our industry is, high character people working in pressurized situations that have to find a way to get to yes and succeed. So a lot of times you can rely on those people in your circle of peer group that you can trust, and that's great too. But another avenue, is relying on advisors in places where maybe it wasn't so natural for you to believe that somebody could help you. And an obvious one, is a Concertiv. And to expand on some of the things that Shane was saying and James, you alluded to, is it's almost impossible to run an RFP yourself in every single, key vendor, even if they're not strategic partnerships, but key vendors, because there's changing market participants. There's M&A activity that changes leadership. And as importantly, nowadays, which Shane alluded to kind of with AI, which I'm sure we'll talk about later, is there's new entrants into the market, right? So having let's just call Concertiv an advisor. Having an advisor that can canvas the market and they understand what you've been buying historically and what you might want to buy in the future that says, hey, historically we talked about these five options. Well, you know what? Only three out of those fives are players today, but I got three new ones that we've been talking to. And here's what they've been saying. I think that can be powerful. Another area that I underestimated many years ago, I think it's been 6 years since we first signed up with a PEO from buying our health and welfare benefits directly, right, in the marketplace through a benefits broker. But now what we realized is not only can that become, as opposed to a key vendor, we're starting to, we've been approaching that as a partnership as well. And we've used a PEO advisor to help us narrow down the choices in the market because, you know, there's at least, I mean, I could say half a dozen, but there's probably a dozen viable options for our industry. And are you going to run an RFI and then an RFI with 12 to get to an RFP of five? I mean, who's got the time for that? Who's got the energy for that? But I think working with an advisor who can help understand who you are, what you do, how you do it, and narrow down your choices and help you manage that type of a process, that can be very powerful too.
Yeah.
So
No,
just
good
trying to give,
points.
different food for thought around this stuff.
Yeah, and look, when we talk about vendor management, very clear that cost is not the only focus, right? There's a level of service, there's product that you want good quality, but cost is a concern at all times. And we see that in the industry, costs seem to be rising 8, 10, 15% dependent upon the service that you're in the market for. How does not having a vendor management program impact that? Or said differently, having a good vendor management program in place, does that help to mitigate the rising cost? And I'll give it to either one of you, Shane or Elliot, whoever wants to take the lead on that one.
Shane, I'll start on this one. So very simply, we're fiduciaries. Whether or not, I think most of us on this call are registered with the SEC at a minimum, but whether or not you're registered, you're a fiduciary. And our jobs span the entire firm, including vendors that get charged back to the funds, which are ultimately borne by your investors. And so it's always important, at a bare minimum, to get two bids on your vendor relationships. And in some cases where that's difficult to do on your own, being able to point to a relationship like a Concertiv, right? So in our travel platform, I can say that I'm getting score sheets and reports that are telling me on average against rate card, what am I saving? And so is that the best I can possibly do? I don't know. It's almost impossible to know. But as a fiduciary, I could say I've actually put some thought and time and effort into this and not just waved in whatever's coming into the firm. And then when you take things like, technology and compliance providers, a lot of those the firm is paying for. But in some cases, if you're self-administering, maybe technology platform costs are going to a fund. I don't know. But you've got to look at things through the eyes of a fiduciary. And I'll end with this thought and pass it over to Shane, which is when I think about my fiduciary responsibilities, and I think this is a healthy way to go about it, um, is that of course you have a fiduciary to the investors, but don't you really have a de facto fiduciary obligation to the owners of your firm as well? And so if you want to, if you want to be um, a robust and trusted professional, I think you're looking at everything through the eyes of a fiduciary.
Yeah, great point.
Uh,
Shane?
well said. Very well said. That's tough one to follow up on, but I guess I'll try to put some numbers in here to help. This is only part of the picture, as was already said. But what we see across our client base, in terms of direct impact, is our average contract size. Median's going to be less than this, but average contract size around 100K, that we'll manage for a client. We would see about 15,000 of cost wasted on average, maybe 16,000, between 15 and 16,000, 15, 16%. To give you a little bit of a build up to that, direct hard dollar unnecessary costs, usually it's the contract actual cost, but there are some other hard dollar costs too. Be about 2/3 of it. So about 10K of that, maybe 11. And then the other 5K or so would be quantifiable soft dollar costs, mostly people's time, sometimes things like errors on invoices, payments, etc. But that's usually what you see in dollar terms. It's about 15%. It's per year, by the way. I think beyond that, there are all sorts of intangibles in terms of, do you have the best vendors you could have? Are you actually using your time wisely, right? I'll go back to my personal story. Like, should I have been spending that time negotiating those things and looking at those vendors myself, or should I have been doing additional investment research? Probably, you could argue I would have had a higher return on my time doing that additional investment research, but it just, I was the person at the end of the desk that got handed to, so somebody had to do it. I think having somebody else look at that so you can focus on your core business generally is not going to be the things that we're talking about generally. Very hard to put a number on that, but it's a big deal. And then also related, do you have the right vendor, right? And I think that could also, whether you want to measure that in terms of investment returns, insights, or something else, I think that's also a pretty material consideration. It's hard to put a number on as well.
Yeah, no, that all sounds great, Shane. Real quickly, just to everybody on the webinar, there is a Q&A section. If you do have any questions, please just enter the questions there. We will have some time for Q&A at the end of the discussion. But did just want to highlight that the Q&A function is there if you do have any questions that you'd like to ask. As we continue to move through our discussion here, let's think about best practices. When you look, and Shane, we'll start with you on this one. When you look at a firm that is doing well with vendor management, right? You had a list of items earlier to think about. What is a list of some things that firms that do this well, what is a list of some things that they do?
Sure. I'll try to keep to the short list because this one
Okay.
can get really long. But first thing I would start with would be, thing we've touched on a bit already. You gotta have a central view of what's going on. You have to have some sort of central capability where something beyond just a file folder, where you know who your vendors are, who owns that relationship, what you're spending on them, what the next renewal date is, what the next auto renewal date is. It's just without that, you're stabbing in the dark. So I would start there, and that data obviously has to be up to date as well. We find really basic reporting against that to be quite valuable too, especially saying this group is spending this much on these things, this group is spending that much on these things. It's an incredibly powerful social mechanism, you might say. So that's something that I think our best clients do exceptionally well, and I think everybody should do a little bit, but again, you can't do it without the data. We mentioned benchmarking already. I think that one's self-explanatory, but you should have a sense of what you're spending versus others. You don't necessarily need to find yourself in the bottom decile, right? I mean, by definition, everybody can't be in the bottom decile, but you sure as heck shouldn't be in the 90th percentile. And I think knowing where you fall on distribution is important. There's a whole number of support processes around this that I'll probably not spend that much time on, but making sure your usage data is up to date is a particularly important one. That's true for expert networks and a number of other types of licenses. It's actually kind of hard to do in some cases as well. So our better clients do that in a pretty fulsome way. We help them with that. The relationship bit already mentioned, but for those top vendors, knowing them, having a relationship, having some trust is a huge deal. And then last but not least, and then I'll stop, you should have a sense of the business impact. You should have a sense of what you want to get out of this, and are you getting it or are you not getting it?
Yep. Elliot, as it relates to Trilantic, right? Shane went through a number of items there. With your experience at Trilantic, what part of your process do you think your firm does well, and what benefits has it created for you?
So when you say our firm, I'll just kind of think about my finance and operations team. Um, and so first of all, um, I say that understanding that not everybody, depending on your stage of growth, is going to have a team that you can rely on. But one of the things that I think we do really well is communicate with our vendors. So more often than not, I can't say 100% of the case, but in the vast, vast majority of the case, whether they are a strategic partnership or a key vendor, then there's the all other. But in those two baskets, I think our vendors know what our expectations are, and they know where they're meeting or exceeding or not meeting those expectations. Because on some level, I think Shane used a lot of words, and one of them was kind of trust, right? So there is a lot of trust, but in order to, it's easier to trust if you communicate what it is you want. It's easier to trust if you have a team that you have to start by trusting your own team. And you have to be able to delegate to the extent you have a team, some vendor relationships to your team. The people that are interfacing with those vendors on a day-to-day, month-to-month, quarter-to-quarter basis, you've got to be comfortable with them dealing with the on-the-ground key service providers, right, at the vendor. So I think that that's a big part of this. And how do we do that? It's not always a phone call. For some of the biggest and most important vendors, we'll bring them into our office, the entire team, once a year at a minimum, sometimes twice a year, and we give them a preview of our business plan and what we are trying to accomplish over the next year so that they can feel connected to us. Now, that's not always practical to do or the right thing to do in some cases, right? Um, but I think that we found that to be very, very successful because if it's going well, you just got to keep doing more of the same. But if it's not going well, right? If you were to do an after action report and think about what are the things that didn't go well, right? There are things that are in your control as the GP, and there are things that are not in your control. But one of the things in your control is to communicate frequently. Um, and nobody knows that better on this call than Shane, because Shane and I get together at least twice a year. And sometimes it's a cup of coffee in the morning, right? So whatever your life situation allows for. Sometimes it's a cup of coffee or breakfast. It could be a lunch. It could be a drink. It could be none of the above. It could be coming to the office for a half hour. But I think being very direct and specific about what you need, what you want, yes, they're two different things, right? And then if a vendor or service provider cannot deliver that, it makes the otherwise difficult conversation really easy. Really easy.
Yep.
So if you want to make, if you're in a seat like mine, regardless of the size of your firm, but if you want to make difficult conversations easier, be upfront about what you want and what you need. And then if the vendor can't deliver it, it makes a decision really easy. Either they're going to swap people, or or the service delivery is going to change, or you're just going to price them out or go somewhere else. But it actually makes that not very awkward because you laid out what you wanted, what you needed. And if you're not getting it, again, I'm not repeating myself to belabor the point, but to be very clear, those conversations become much easier.
Yeah, I mean, Elliot, that's a great point. And anytime you'd like to be a client of Citrin Cooperman, we'll gladly have you if that's the way you handle your vendor relationships. But in all seriousness, it is a great point there as far as meeting with your vendors periodically, reinforcing that communication. And, in terms of having that process and you initiating that contact, that's great. But a good vendor will be the one initiating that contact a lot of times as well. I know personally, I'm on the vendor side of things here, and I want to reach out to my clients. I want to understand what's going on in their business. Are we giving them what they need? Do they need something else? Do they want something else? And how is the relationship going? And you're right. If both sides know what the expectation is, it makes difficult conversations a lot easier because everything's already been laid out there.
Yeah, and look,
Um,
I'll throw one more thing out there,
yeah,
James, and because I was thinking about it. This may be obvious, but it may not, or maybe it might be nice to hear the obvious from someone else, which is a lot of times, whether it's a new vendor or existing relationship, right? A lot of times it starts with a business development person at the vendor, or if it's an existing vendor and it's large enough, right? They might have an account manager.
yeah,
If it's a vendor that requires human beings to deliver the service, I think you always need to have that person in the room, not just the biz dev or the account manager, because I don't like playing telephone.
yep,
I don't ever want to come back after the year of me laying out expectations, wants, and needs and hear that they heard it third hand or fourth hand and they didn't fully understand what I wanted. Uh, None of us have time for that. I mean, none of us on this webinar have time for that. So I think that the biz dev person slash account manager person has value for sure, but you want the practitioner who's the SME, and you want them to hear the message directly from you. And I think that that creates the healthiest of relationships. That's one of the things that we've learned over the years. And by the way, in some cases, we learned the hard way.
yep, yep. Yeah, no, makes sense, Elliot. And no webinar, seminar, what have you, would be complete without touching on AI. So when you look into the future of vendor management and you think about AI, where do you see AI playing a role? Are you using it yourself, or do you see your clients using it now to help with their vendor management? So, Elliot, I guess we'll stay with you on this one here. Are you using AI in your vendor management process? Do you foresee using it at any point?
I'm happy to start, but I really want to hear what Shane has to say
We
about
can we can
this
let Shane
because
can start
he's
first then.
he's
Yeah,
he's on the front lines. But no, I mean,
let's
I look, I can give you. I Here's what I would say. I don't think we're ahead of the game. I don't think we're necessarily behind. I think we're watching everything happen and we're inserting ourselves where we can. Um, AI is going to play a role, and it's going to accelerate a lot of things. It's going to displace a lot of things. Um, but from a kind of vendor procurement and management perspective, um, I do think that while there's going to be an acceleration of the robots, a lot of the services are still going to be people based in our industry. And so you have to have a balance of still being able to speak to the human beings on the other side and make sure you understand how the service delivery is going to happen. I'd love to kick it over to Shane and then come back with a couple of things
sure.
that I see happening from professional service provider vendors.
Absolutely, Shane.
Is there's so much on this one. I was gonna make a professional service comment too, Elliot, but maybe I'll hold off. I'll let you cover that one. But there's a lot of cool stuff going on there too. Um, I'll just talk about like what's happening right now. This is much more in the kind of crawling, walking category than the running category. I'll talk about what's happening right now that we're doing and we're seeing to be quite helpful. And then there's also what is it doing to the overall ecosystem of vendors as well too. But in terms of what we're seeing, I mentioned before, if you don't have your data or your contract data or your vendor data, whatever you might like to call it, if you don't have that collected in one place with visibility, it's really hard to make decisions. It's hard to see what's going on. These LLMs are wonderful at ingesting contract data. right? There's all sorts of, Elliot will probably talk about it, but there are all sorts of applications in the legal space, places like RB.ai and others that are pretty amazing. I won't get into that, but I would say when you think about pulling the key fields out of contracts, and I spent so much time doing this back in the day. So our team spent a lot of time doing this a few years ago. Every time you get a contract, someone's got to read it, 20, 30 page long, you got to pull all the key fields out. They're written different ways. It's confusing. Take 30 minutes, an hour just to get that key information out and make sure that's right. We can do it in 5 minutes now. We still have a person check it, but you just drop it into the machine. Every time you do it, it gets a little bit smarter, and it'll give you 99% accuracy, 98% accuracy, and it'll even tell you the fields that are maybe more likely to be wrong, and you kind of quadruple check those. So that problem of ingesting contract information is trivial now. And then related to that, querying what's in there, just very simple AI chat, similar to what you see on a chat GPT or something, of, hey, what's my next renewal that's coming up, or how much am I spending? You can just type that in, so you don't have to go and look through your database or call somebody. Really basic, really simple stuff, but it saves time, and it takes friction out of the process. So, like I said, kind of more crawling, walking type stuff. There's cooler stuff that's going to come undoubtedly. Especially around how you think about pricing negotiations, almost like a co-pilot model, similar to what you might see in financial advisory. But then in the landscape, I mean, we're going to go through a period of change unlike anything we've ever seen before. I think we're already in that period of change. It's inevitable. So the level of, everybody has probably seen some of these already, the level of new products that are coming online and collecting information in a new way and reporting it back to you, whether it be something you do yourself or something that somebody else does for you. I won't go through it all, but there are just so many things that are happening right now that are changing the way the investment process works, information collection process works, and the report on it. And I don't see any signs of that slowing down anytime soon. Huge opportunity, also a huge challenge, because who has time to do that? Who can figure all that stuff out?
Yeah, and
Elliot,
Shane, to piggyback on that, what I think it really comes down to from my seat is I think we're going to have now an inherent knowledge center, inside our firms that are also going to have much better transparency than ever before, because the data is just going to be more accessible without necessarily needing, massive databases and or database managers, let's say. So I think that that's all going to be a positive. When I think about professional service providers, and this will extrapolate to others over time, and there's a lot of professional service providers that don't like hearing this, but I think it's the truth. It's inevitable. It's things that we've been reading and we know is coming. But the way I boil it down is I think a lot of professional service providers over time are going to initially see revenues come down, but gross margins be flat to up. And there are going to be some that don't embrace that, and they're going to be at risk of getting walloped. And the ones that do embrace that are going to have the opportunity to turbocharge their businesses. Um, so I think that's going to happen. I think in some cases it's here and now. Um, and I think it's going to continue, whether it be administrative services, audits, tax compliance, tax advisory, and legal. I was just at a legal tech conference a few weeks ago, and it's amazing what law firms of all sizes are starting to do. And while on the one level, they understand the concept that I just mentioned about, revenues coming down in their core business, but margins potentially staying flat or increasing with the use of AI. What was really interesting is they were talking about the acceleration of their businesses in some cases, where they can take on clients, projects, or other services that they wouldn't otherwise be able to take historically because it didn't meet minimum size requirements for their firms. Who knows? James might have something to say about that, because you're seeing that big four, next four, all other. around compliance and advisory services, big law, medium law, small law. And so I think we're going to see a lot of that. And I don't think that that's 3 to 5 years out. I think it's kind of coming now. And the last point on that is there's going to be a unique opportunity right now for new entrants in all of those markets who are starting with a clean sheet of paper and are well funded, that are going to basically elbow their way through incumbent service providers and find themselves smack in the middle, if not the upper tier. Um, because again, if they're well financed and well thought about leading with the I think there's going to be a lot of disruption. That might not be today or this year. That might be 2, 3 years out, but it's coming and it's coming fast.
Yeah,
Can I just add one more on that one? This is just such a cool
sure. Go right
topic.
ahead.
I know we got other stuff to talk about, but I saw a study a little while ago from my old firm BCG, and the strategy consultant types can be a little bit self-congratulatory sometimes in terms of how smart they are and how difficult to replicate their work is. But the reality of the situation is, by the way, this was a year ago. I have no doubt these numbers will be quite a bit higher today and will be even higher next year. Um, Paired with an AI copilot, a BCG consultant on average worked 25% more quickly and produced 40% better results. It's a large sample size, by this, a big study. It's 25% more quickly, 40% higher quality results. Quality defined as sort of accuracy as well as volume. So that's pretty interesting. Even more interesting when you split it by the performance of those consultants. And use two categories: upper 50% of performers in their reviews, lower 50% of performers in their reviews. The lower 50% of performers saw roughly double the impact. So if I take that speed number of 25%, they would have been something like 40% faster, whereas the top performers would have been something like 10 or 15% faster, whatever the numbers came out to. So what that means is you can have different types of profile that you pay less, produce more results. And that's dramatically, if you do want to do more work, dramatically expands your pool and allows you to do different types of stuff. So to me, those numbers were just incredible. And again, this is a year old, so starting stale information. I'm sure those numbers are much greater today. And this is pretty sophisticated knowledge work. Right? It's one of the more complex things that professional services do. I think as you get into other types, it's probably getting more extreme.
Yeah, I would agree with everything that both of you said there. Elliot, very interesting the way you position things with the decreasing revenue, but increasing margins. I think that makes a lot of sense, and definitely do agree with what you were saying in terms of broadening the scope of client base. If the cost of delivering a service is going down, then yes, you can then serve clients that may have been too small in the past, because now you can do it at a cost-effective price point for the client, while at the same time still producing the margins that you need yourself when you provide services. So definitely some interesting trends coming, both with AI and without AI. And I see we're coming up on time, and I do want to be respectful of everyone's time. I'm going to take a look and see if we have a few questions here. So yeah, I have a couple here. Uh, let's see. I've got one here for Elliot. Elliot, do you see not having a proper rigor around vendor management process in place, or working with a firm like Concertiv, becoming a gate for allocators? Have you been hearing more about this from investors lately? So this goes right to your point earlier about being a fiduciary. Are you seeing allocators, investors approaching this topic with you?
Um, yes and no. So where
Okay.
they approach it is for the larger allocators and or gatekeepers. You're always filling out pretty robust operational due diligence questionnaires and sometimes meeting with an ODD team that could be in-house or outsourced to come and understand your processes and procedures. So you want to be able to answer those questions in a thoughtful way. Doesn't necessarily have to be so rigorous, let's say. That said, what do they really want to hear from you? What they really want to hear is that when you have a new vendor or a vendor that you've had for a number of years, you're running a market check, you're running an RFP, or you're benchmarking fee versus service in a way in which you could say to them, when I look at the services I get and what I'm paying for them, they feel to be in line or better than market, at
Yep.
least in line with market, right?
Right.
And how do you demonstrate that, right? So, like as an example, you're not going to go RFP your auditor every year, right? That might actually be a red flag,
That's right. That's right.
right? But I think, let's say you had at least one pre-existing fund, and now you're raising a new fund. I think what it's important to be able to say is that you're going to get two bids for all the work
Yep.
in that new fund. Now, I'm a big baseball fan. So in some cases, what I like to say is, look, there's a little bit of efficiency if I have the same auditor.
Yep.
And so in baseball, tie goes to the runner. My incumbent auditor is the runner,
Yeah.
but I'm not going to give them a premium
Yep.
at a disadvantage to you, my investor, just because they're already there. So I think when you're in front of people and you're having the conversation and they see that, one, you're thinking about it, you're being thoughtful to their bottom line. That's just one example. I could give you a bunch, but
Yeah.
like I think that type of thing lets them know.
Yep.
Obviously, if you had a Concertiv, you could point to that and say, "Yeah, I really thought about that. I don't know how to tackle, travel around, our team goes to 40 states and 6 countries, or whatever it is. I don't really know how to tackle that. And so they're managing this for my behalf, you know. It at least shows that you've thought about it and you're trying something that makes
Right.
sense.
Right.
That's how I would tackle that.
It has to be something that is acknowledged that you're considering as part of your fiduciary duty, but it's not a major
Yeah.
sticking point with allocators.
And by the way, it doesn't
Um,
always have to be the low cost service provider.
that's right. That's
It
right.
doesn't.
And we've got just a couple minutes late, and I do want to get to these next couple questions. Two of them are pretty fairly related here. Thinking about the size of the manager that would get involved in outsourcing vendor management or how to coordinate this process internally. Shane, is there a specific size that a firm should reach before thinking of outsourcing vendor management? Um, and if not, how would those smaller firms think about handling it internally?
Yeah, good question. Try to give a really quick answer for time here. Generally speaking, we find emerging managers. So, newer shops up at 1 billion type places. It's actually very easy to outsource, Concertiv or otherwise, because you haven't built bad habits, basically, and everything's sort of not distributed across 20 different teams. And for the small mid-sized shops, there's still a lot of value to be had if you're a $1 billion, $10 billion, even a $50 billion type place, 50, 100, maybe even 200 employees. And then at a certain point, once you get up to that kind of 100 billion AUM range, maybe even a little bit less than that, we see people start to get those dedicated resources internally. I think you still probably want to use tools from other people, right? You want to develop these things yourselves, but you start to build your own capability. And obviously, by the time you're Blackstone or KKR or a traditional asset management shop like Fidelity, you're doing stuff yourself and you know fully built out.
Yep. Yeah, that sounds about right, Shane. So it's important to everyone, regardless of size, and similar to many other services. When you're smaller, you're an emerging manager. you're never too small to outsource. That's the point of having the outsourced providers there. And I know we've got like 1 minute left. We may go over a minute or so, but I do want to get this last question out there. And this is kind of to both of you, Shane and Elliot. One of the attendees is asking, once you've taken care of everything internally at the firm level, you've got a good handle on your vendors. The next step, portfolio companies, if you're a private equity firm, for example, how do you think about that? How do you think about the vendor management at the portfolio company? And how do you think it would relate to kind of value creation, due diligence, et cetera?
I think first that depends on the firm. Um, some firms have an operating partner model. Some firms have a value creation team. Other firms tend to let the entrepreneurs run their business and maybe make vendor recommendations, but not impose vendors.
Yeah.
So I think it's a little bit of it depends on your firm's strategy and go to market and how they're creating value. Um, there is value that can be created by all of these things, but at times it may or may not be a top priority, right? If you're a shop that's focused on, let's say, turnarounds or process optimization, yeah, this stuff is going to matter and be primary to what they're doing around value creation. But a lot of times, if you're in early stage businesses or you think you're going to make your money on growth, then what they're really looking for is more like revenue synergies, new customer acquisition, and the optimization of SG&A spend is always going to be on the controller's mind, maybe the CFO's mind, but not top of mind.
Makes
So
sense.
I really think a lot of that depends. But can you
Depends on the shop.
apply? Can you apply what we're doing to portcos? Usually,
Yeah. Yeah.
but it's not all
Shane,
encompassing. You really have to understand what the goals of that company are and how you're going to drive value to sell.
absolutely.
Yeah,
Absolutely.
very well said. I would just say for those that lean more in the direction of hands-on value creation, that concept around getting vendor information in one place, I think is very powerful. There's a lot you can do once you do that. So we're increasingly doing that for our funds that, own dozens of companies or more. And then we did develop a self-service travel tool for precisely that same reason as well. For sake of time, I'll leave it there, but I do think there's the people who want to lean in that
James,
direction. Want to
yeah,
go.
James, I actually see one more question that I feel compelled to answer because it can help
Go for it,
somebody
Elliot.
it can help somebody action something, but there's a question
Absolutely.
around managing expectations for vendors who are looking to grow their spend with you,
Yep.
right? To grow your spend with them, I should say,
Right.
particularly those who are critical and right. So there's a couple of ways in which we've tackled that. One way is if those are, let's say, professional service providers or semi-professional service providers, a lot of times what we'll write into the contract is a base annualized increase that's against some cost of living index. And we'll write it into the contract. And that way there's no confusion. So I'm blanking on which one we use, but sometimes we use the one that's around kind of all services, all industries, and that will kind of get you to an inflationary adjustment. And then that way it doesn't get awkward. And so they can count on the inflationary adjustment. But again, if you have good communication with your vendors and they need more or less than that, they can come to you.
Right.
So with one vendor, I actually wrote into the contract that they cannot outsource to, they cannot move people based in the US to India-based services without my approval. And that forced a conversation, right? And they were like, I need more money. And
Right.
I pointed to that and I said, well, let's bring India back into play. How about that? And this one vendor, ultimately, I allowed them to move two of the heads to being serviced in India in exchange for no increase that year. Right?
Yeah.
So you've got to really think strategically, and a lot of it is in the setup. What's in the contract?
Yep.
But even if
Yep,
it's not in
makes
the
sense.
contract, these are the types of conversations. Don't be afraid to have them.
Right. Right. I think, just to bring it all together and wind it up, appreciate everybody that has stayed on as we've gone a few minutes long here. But that's a testament to how important this topic is and the great information that Elliot and Shane have been providing. So again, thank you to everybody for being a part of the webinar today. I think you continue to make it very clear, guys, that communication is the key here. It's communication, partnership. It's not just a transaction in dollar and cents. It's much larger than that. And in the end, you all involved have a positive outcome from this relationship.